Yesterday, I had a client say this to me. Jason, as I expanded my business, he's an arborist, he's a landscaper, and he said, as I expanded my business, I had a great relationship with the local credit union. And every time I walked in, the bank president was super personable, always came to greet me, made me feel like part of the family. But then one day, when I was going to get a new piece of equipment to expand the business, I had a light bulb go off and I realized I was nothing more than a vessel for their profit. Pause there for a second. Look at how the common American, not you guys, not anyone watching this, but look how the common America is operating. We're operating with everything right in front of us being told to us, but we're okay with it. We're at the highest debt rates ever, personal debt in our country. Student loan debts are the biggest asset of the government. Hey everyone. Welcome back. If you're here, chances are one of two things is true. How many of you watched part one and said, this sounds incredible, but I still have questions? And how many of you are thinking, if this whole IBC thing is real, why isn't everyone doing it? You're not alone. These are the exact questions that smart people ask when they're this close to a breakthrough. First of all, welcome back. Hats off to you for showing up. Seriously? Most people get distracted. So many can be here and they're not, but you didn't. And here's what you're going to walk away with today. You're going to finally understand how policy loans actually work and where the interest that you're paying really goes. And you're going to see how families are using these policies right now for debt payoff, investing in big purchases. You're going to learn what insurability and the human life value have to do with how much you can put into your banking system, how much you can fund. And you'll find out why this system is radically more stable than the stock market or real estate. But more than that, I want you to see how all of this fits together. If I could, let me share why I care so much about this. Years ago, I was the guy who was chasing the rates of return. I had a great income, compared to anyone else in my family. And even though traditional advice didn't make sense, that's all I listened to. And I had a couple of those future should be good enough, hope it's good enough accounts. But what I didn't have was liquidity. What I didn't have was control. And when real opportunities came up, when people said things to me around the water cooler, I had to say no because my money was locked up in financial prison. I had no liquidity. When I discovered this system, when I asked for help, when I was ready, everything flipped. Now we get to say yes to opportunities because we've built a system and a tool that grows each and every day with us, gives us control, and gives us access whenever we need those funds. That's what I want for each and every one of you, to go from stuck and worried, stressed out, to excited and abundant, to ready for whatever comes up, prepared. So here's where we're gonna go today, where you're gonna walk away with. We're diving deep into IBC and not the theory, but the practical side, how it works, how to use it, how to think about it, especially to how to think about it. I'm going to walk you through 4 of the most important questions that I get every week, if not every day, and I'm going to answer them clearly, visually, and with real life examples. And by the end, you're going to understand the system at a level that most advisors don't, that most participating members of their specially engineered policies don't. You're going to see exactly how you can start using this safely and strategically. So stick with me because I will show you the real examples of how your IBC system works, and it might just flip your mindset like it did mine. So let's dive in. And this is part 2 of this month's series where we're kind of wrapping up the top questions of 2025 and really diving deeper into the practical side of all this, using the powerful tools that our team has. And so you'll see some things from the vault. You're going to see other things that are really going to take things to the next level, no matter where you are in the journey, whether you're just training, whether you're in process of testing, or you're the one that's teaching. Like maybe you're Shane teaching his family, teaching Sabrina, teaching the people around here. So this first question we're going to go through is the one that breaks most people's belief systems. This question right here. And if it's not explained clearly, people get stuck. They think, and the reason I think they get stuck, and you guys can pop in the chat if you think this makes sense. I think people get stuck right here often because they think the infinite banking concept is giving them back control so they don't have to do any banking function. So all of a sudden, they can borrow and not have to have a system to pay themselves back. So this question right here is, how do policy loans really work? But why would I set up, or maybe it's said differently, why would I set up a policy where I can borrow against the cash value, collateralize, borrow against it? Why do I need a plan to pay it back? Why do I need not to steal the P's? And they want to know, does the interest come back to me? And the answer directly is no. And they also want to know, do I lose growth when I borrow? Do I make more money when I take loans? The answer for both of those is kind of depends on what you're using it for. Is my money still compounding during a loan? Yes. Let's get this locked in. When you take a loan from your policy, you're not withdrawing from your cash value, right? Again, you're borrowing against it like a line of credit. You're using your cash value as collateral. So this means that your cash value continues to earn dividends and guaranteed interest, even with an active loan. And the insurer that loans you the money, right? The mutually owned, your partner is loaning you the money from their general fund. And it's using your cash as a security, right? Like in a home equity line of credit, your home is that security, is the asset. In this instant, the opportunity, the money that you put in, that's cash value in a policy, is what is being used as security. And you're borrowing against that. The interest that you pay goes directly to the insurance company, not back to you. But the beautiful part is that that money that you're borrowing, the cash value, it never gets interrupted. It continues growing on a daily basis and getting more and more valuable every day that it's there, no matter what, no matter if you've taken a loan or not. It is still growing every day, guaranteed, contractually guaranteed, tax-free, away from TOSAM. And then at the same time, right, at the same time, you may earn a dividend. And all of the carriers we work with, all of our partners have never missed a dividend. And so why does this matter? Because most people think of the loans like draining a bank account. Think about this. Like when you have money, and pop the answers in the chat, please be interactive. When you pop, or when you have money in a regular old, imagine a bucket here, a regular old savings account, and say you had $50,000 or $48,000. And now you need to buy something for $40,000. What happens when you have a regular bank account? You draw it down and you have $8,000 left that might be earning you a small percent of interest, but now that other money has gone to do its job. But when you're using IBC, the big difference is all $48,000 that you've borrowed, or all $50,000, all $100,000, all $10,000, whatever the number is, that you've taken a tax-free loan against your money from the general fund of the insurance company, all of that money continues growing guaranteed tax-free, most likely earning you a dividend and providing the umbrella cherry on top for future generations. And so when you're thinking about this, traditionally, you're not going to see the power, because in IBC, you're not draining the system, you're leveraging it. You're leveraging it, you're giving the same dollar multiple jobs. Does that make sense? So there's more, right? There's more to this. Let's look at when someone borrows from a loan, what that kind of looks like. So in this example, we took $25,000 out, like our training video when we have someone buying a $25,000 vehicle. Now, again, if you guys want Ferraris, I'm sure some of you, maybe Robert Johnson wants a Ferrari, or Michael Trayer, but if you want a Ferrari or you want something that's really sporty or really expensive, like my buddy just bought a $106,000 Ram truck, that's just a beautiful truck. But if you're going to take a loan against your policy, have a repayment plan. Don't steal the P's. One of the third concept from Nelson Nash's book, Becoming Your Own Banker, but have a plan. And this individual, they're taking $25,000. They're going to pay it back over 4 years, which gives them a payment of $531. When you're looking at this, at this repayment plan, you're seeing that they're borrowing from the general fund of the insurance company at 6% simple interest. They're going to pay roughly $2,800 of simple interest over that 4 years. making their effective APR 2.88%. But let me tell you what's happening with your money in this example. You have all $25,000 still growing, uninterrupted, tax-free, and most likely earning you a dividend while it's protecting your family. Yes, it's doing all of those things, even while you're leveraging it, using it as collateral, as a line of credit. Now, this repayment plan, 48 months, is set by who? Who sets up the plan to repay the system? You, the banker, the policy owner. This is your opportunity to be an honest banker. Now, you're paying back what you would have paid the banks. And we're going to get into this on a deeper level as we go through this. But let's look what happens to the interest, right? If you pay it back in half the time. If you pay it back in half the time, your interest goes down by half. Does that make sense? So the faster you pay your system back, you refill, as we talked about last week, you refill your bucket with the loan, with the cash value, the faster you can use the money again, and the less you're going to pay your partner, this mutually owned company that you're a first position partner with. That's important. You're number one in this relationship. You're number one to tell that insurance company what you want to do with your money. And so now if you pay it back in 24 months, yes, you're paying more back to your system faster, but you control that. You can pay it back over a longer period of time, a shorter period of time, or pay it back all at once. And so you can actually see how this interest works. And as someone put in the chat, you can log in with your carrier and you can see what the actual interest rate that you're borrowing against, you're collateralizing your money looks like. And so if you believe what I believe, right, the wealthy have more choices. Is that fair? Folks who've had a conversation with me recently have heard me ask them that. Before I move to the next big question I'm asked all the time, let's take a journey. You guys know how I like to do visualizations. You know how I like to take you on a journey. So I want you to think about, this was said to me yesterday, I want you to think about a time, could have been recently or in the past, when you needed a piece of equipment for your business. Maybe a new vehicle for your family. Maybe your family's expanding, so you need a bigger vehicle. You want to put a family of dinosaurs on the back of your vehicle because your family's expanding, or a toddler on board, baby on board. Maybe it's a new AC for your rental. Maybe it's a heater for your rental if you're someplace cold. When these things happen unexpectedly, what's the first emotion that comes up? Oh my God, my wife's pregnant. I need a new vehicle. Oh God, the AC on the rental broke. What's the first emotion that comes up? Be honest. If it's no worries, we're ready for this. We've got this. We're prepared. That's what a banker that has an opportunity fund thinks. Or, not you guys, but most Americans are thinking, oh man, not now. God, this isn't the right time. We don't have the money for that. When it's the latter situation, that is the common situation. And what's the common solution? The common solution is to open up your mailbox, to take out one of those 0% offers from who? From the bank, to use a credit card, to use a personal line of credit, to ask a family member, can you loan me some money? We had this unexpected thing come up. Is it really unexpected, or is it just life? Let me ask that again. Is it really unexpected, or is it just life? When we are bystanders to our life, things happen and surprise us all the time. We're surprised. We're like, huh? I can't believe that happened. But we know that change is guaranteed. And in this situation, when you have to go to the bank, when you have to go get a personal line of credit, when you have to borrow money from a friend or a family member, in that scenario, who's making the money? The bank. That's it. The bank. And, even though I can't see you all, I've met many of you in person. You're a good looking group. Charming, some might even say. And my next question is, do they give you a loan because of your looks, your smile, your sharp outfit, your new shirt, your founding father's shirt? No, right? No, we know that that's not the case. We want to feel liked and seen by our banks. We want to believe when we pull up and there's that parking spot ready for us, and we walk in, they greet us by first name like Norm at Cheers. We want to say, man, I like this bank because of the relationships, the people, they make me feel good. Yesterday, I had a client say this to me. Jason, as I expanded my business, he's an arborist, he's a landscaper, and he said, as I expanded my business, I had a great relationship with the local credit union. And every time I walked in, the bank president was super personable, always came to greet me, made me feel like part of the family. But then one day, when I was going to get a new piece of equipment to expand the business, I had a light bulb go off and I realized I was nothing more than a vessel for their profit. Pause there for a second. Look at how the common American, not you guys, not anyone watching this, but look how the common America is operating. We're operating with everything right in front of us being told to us, but we're okay with it. We're at the highest debt rates ever, personal debt in our country. Student loan debts are the biggest asset of the government. We are nothing more than a vessel for the bank's profit, period, full stop, end of story. That should be a t-shirt. That should be a t-shirt. When I heard that, I was like, oh my God. I showed Patty this picture. She's like, baby, that's not a vessel. I'm like, yes, but each of us individually, we are all vessels and we're nothing more than vessels for the bank's profit. So once we understand this is enough reason to change one thing and start building our system. So when change comes, we are now builders, creators. We are now the captain of our own ship. Smash the like button, ring the bell, and don't forget to subscribe to the channel because why? We're bringing back banking to the you and me level. And we're doing this intentionally because we all want to be builders. We want our dreams and we want to stop giving them all of our hard-earned money. As I talk about every week, invite your friends. Who can you invite? Who are the people that you like or people you don't like that need to know about this concept? Why do you want to invite them? Because you're going to add that kind of value, showing someone this simple one change that changes everything for thousands and thousands of people, myself included in my family. I can tell you from experience, we have went from stress and debt to abundance in less than 4 years. So make sure that you're smashing, you're liking, and you're ringing the bell to alert you for all that new content. Spread the message. I'm grateful and blessed for you. I'm going to see you in this next video here. But before that, stick around. We've covered the most 6 important questions that I'm asked on a daily basis, the most common questions of 2025. And we're going to continue the journey by looking at the next 2 questions. You don't want to miss it. We're going through real life examples from real clients, showing you real numbers. Stay tuned. Let's check out what's next. The next question I get all the time is, okay, Jason, I kind of, and this one's interesting because I see how I could use this system. And then people get really excited when they think, I can use it for everything. I can use it for my regular day-to-day expenses. I can do this. I don't have debt. There's all of these things, but we always say, hey, it's either to eliminate debt rapidly, to make major purchases, to build, to put our little men out to work for us so they make us money, right? Like Warren Buffett said, if our money doesn't go to work for us and we don't learn how to make it work for us, what will we do? We will work until the day we die. So that's investing, debt payoff. I've just showed you that the bank doesn't give us loans, lines of credit, or anything else because of our looks, our charm, or our sexy outfits. They give us loans because we are profit centers or vessels for their profit. And when I hear this question, I want you to all think about this. Why would someone ask this question? Because that's what we're always looking for in any conversation. Why is someone saying the thing they're saying to me? Not what are they saying? Why are they saying it? That is a deeper level of communication. So when people say, I don't see how this is going to work for me, what they're really saying is, I'm afraid this other system I've been doing, it's not really working. I feel stuck, but at least I know I feel stuck, and that makes me feel a little bit safer. Because I don't know of a system, a world. Everybody says whole life's bad. Dave Ramsey, Susie Orman, the banks. Everyone else say, oh, buy term, invest the difference, do all these things. So many people come in and there's like, Jason, I don't know how this is going to work for me. Are you kidding? I mean, I get it. But when you control the system, wouldn't the system work for you however you needed money for whatever you needed it for? And so then the question is, well, what's the most optimal use for the money? The things I'm showing you, the things that you're going to pay interest for, write this down. Especially if you're a seasoned person here, write this down. This is all about the environment of where we're operating from, our financial environment. Are we paying 34.5% to them, to the banks? I've asked people before, do you want a 34.5% raise? If you do, you want to recapture all of the interest you're paying to them, which I'm going to show you shortly how valuable these loans are when I walk you through a real life example. And then I hear, yeah, Jason, I get the theory, but again, how do I use this practically? People want to see an example. So this is what we're doing in every single strategy call. I'm saying, hey, I will meet you exactly where you're at today. How many of you have heard this before? I'm going to meet you where you are today, both mentally and financially. And by the end, we're going to have a solution to whatever problem or opportunity is in front of you, whether you have no debt, you have a ton of debt, you have some debt, but we're going to talk about what is the best, most optimal outcome for you in this moment. So you can go from training to testing. And then from there, we're going to build a roadmap for the next 10 years. That's exciting. Where do you want to be? How much money do you want to have? And we're going to tie those together. Because when they ask me, does it work for my situation? All they're saying is, I don't believe this works. It sounds too good to be true. If this was true, why wouldn't everybody do it? Because we show you practically, and I'll show you again, you can use it for real estate. You can use it for paying off debt. You can use it for big life expenses. You could use it to go make money in the market. It's an and both asset. It is making your money work multiple times. And again, there's a right way to do it, and there's a wrong way to do it. The right way is through action and is based on your unique situation. And then how I teach it, how I just talked about it, is there's the 3 strategic uses. There's going to be debt payoff, eliminating debt rapidly. And why do we start there? Why do we even start there for folks who want to go invest? Well, unless you can make more return on an investment, which means that you're taking on some sort of risk, even if you know, like, and understand it and have vetted it, the debt payoff, taking that asset over from the bank has no risk, which I'm going to show in a second how people with no strategy, the no strategy looks like for you. And then we're going to look at big purchases, saving up, being prepared for when your teenager needs their first vehicle. You've been with that kid your whole life. How did you not know that they were going to drive at some point? Did you just hope and wish that wasn't going to happen, or you're going to pay, they're going to start riding bikes, right? We know these things are going to happen, which is funny, right? I'm being sarcastic, but we know all these things are happening. Change will happen. Medical expenses, even when you're eating healthy and taking care of yourself, stuff happens. We all have stuff going on physically. And so the next question is, and I want you guys to answer in the chat, what do you think the value of $48,107 of debt is to the banks? Lots. I like that, Dex. It's lots. Let's put a number on it. Let's do like Price is Right style. If you bid above, you're out. If you bid under, like you bid $1, you're in, but you're not very close to it. You got 140,000, 4,880. Oh man, we got some big numbers here. So the value of $48,107 of debt at 9.52% interest, this is for a family right here in Orlando, that's the answer. Does that shock you? You guys are pretty high. I like that the banks are making a killing. But the answer is $23,906, and it's going to take this family another 11 years to pay off these 3 debts, which was 2 vehicles and 1 big credit card of $28,000. That's what it's going to take for them to pay this off. They're going to pay out of the $72,000, $23,000 of it is going to go to interest to the bank, buying them another vehicle, right? It's buying the bank another vehicle. And so if you look at it differently, over that 134 months, that's consistent, persistent payments of interest, that principal that the banks have loaned you, you're paying $178 a month in interest for 11 years. Is that not wild? 134 months. Who here wants $178 extra a month? You could go on some pretty nice dates. You could save it up and buy yourself something really cool. This is what it is to play small ball when it comes to investing. When you start recapturing this money, you're doing what? You're filling back up your opportunity fund. Because remember, all $48,000 that we borrowed against from the line of credit, which is the general fund of the insurance company, is still growing at a guaranteed tax-free interest rate. Then, as you're building up the opportunity fund, you're going to let that policy value build. And depending on what the opportunity is, right? Because the golden rule, he or she who has the gold does what? They make the rules. So when you start paying this $48,000 back and you introduce IBC to it, look what happens. Now, it's going to take us 10 months to clear all the bad debt. It was going to take 134 months before. Now, it's going to be 124 months faster when we have taken over that valuable debt from the bank. And now, once we've taken back control, what are we going to do? You guys know. What's the answer? We're going to pay ourselves back. We're going to be an honest banker. We're going to set up an automatic loan repayment, and we're going to pay this back in 26 months. 36 months total, 3 years versus 11, and all the debt will be paid off and paid back to ourselves in full. We're going to end up paying a total of $5,000 in change of interest and recapture $18,000. So if we never did banking, I didn't point out the middle option here, we would recapture $9,300 just by using math. The banks want the money slowly, consistently, and persistently. Why do you think car loans have started going to 6 and 7 years? Why did they make this new insane 50-year mortgage? Because they want you to pay a certain percentage of interest to them forever. Because who's in control of that scenario, you or them? The answer is easy. Remember, simple as simple. I'm not going to give you anything complicated here. So now that you're paying yourself back, you have the gold, you make the rules, you've borrowed with a purpose, you had a plan, and you're just going to rinse and repeat this. This is the long game. This is the think long term that Nelson Nash talks about as his first principle of IBC. It's not a one-time trick. This isn't some magic show. This is boring. Remember, we're making whole life sexy, y'all. Like, whole life's not sexy, but we're making it sexy. If this one family, this is such a common example of my 3,500 plus calls. I see this all the time. Some families have a lot more debt. Some have very little debt. Some have one debt. No matter what it is, you can decide, do I want to have no debt? Do I want to take care of that asset that's sitting there that I'm paying the banks and use it? Or can I use my money for the investment or something else? It just really depends on where you're at. And we're going to talk about that scenario in each and every occurrence. And when they're using the money, that policy did what? It kept compounding underneath. Now, this is the real life example that I promised I would show. And look at that difference. Look at the end of the same period of 36 months, they're going to have over $76,000 to now do what with? To go and put that money to work, whether they're making another purchase and keeping that interest in their family, or hopefully at that point, they're going to go find something they know, like, and understand and start having passive income flow in the same way the banks do. This is the meaning and the how-to of becoming your own banker. And now here's one that's a little different. It's a common question, but people forget this is whole life insurance. They feel like, hey, this is just banking, so I should qualify no matter what. And now, while I say there's no real difference between being 21, 31, 41, 51, 61, or 71 years old, actually, the only difference is how much risk are you to insure for the insurance company? Because at the end of the day, the only difference in that person, no matter what the age, putting the same amount of money, whether it's 10, 20, 30, $100,000 into a policy, is going to be what? How much longer could they actually work to be a replacement of their income? So this is where the human life value, it's called HLV. I hate that term. I really dislike this, but if we want to be the best bankers, we want to understand how much can I qualify for? You know, can I fund a large policy if I have assets, but I don't have income? And the answer is, it kind of depends, but it's much easier if you have income. Why? I talked to a guy who had this is 4 years ago, to a guy who had over $1.2 million of assets. Now, most of it was locked up in big properties in California. He had just left a $120,000 a year job, an engineering job, he's like, Jason, I'm going to be an investor. We wrote cover letters. We went to multiple carriers, and the insurer said, no, we will not insure this person. Why? Because they did not see a way that this person could do the one thing that they're contractually saying they will do. I will pay my premium deposits, whether it's monthly or annually, persistently and consistently over time. So our human life value is a combination, it's an underwriting guideline that limits how much total life insurance someone can hold based on a few things. Based on number one, your age. Number two, your income. And number three, it may be some of the financial obligations, kind of what your money's doing, like little kids, debt, business ownership. It's not about how much you want to put in. It's about how much, again, the mutually owned dividend paying whole life company is going to allow based on your total life and the economic impact of that life. And so the good news is liquid assets, like if your income's low, liquid assets can sometimes justify larger funding. This is why I say it's specially engineered for each and every one of you. Even if I had 10 conversations with the same age person making the same amount of money, I guarantee that all 10 of those would be wildly different because everyone's coming from a different frame. So another thing to think about is if you're capped today, like let's say we found your human life values at 1.2 million, and that's how much coverage you have on your body. Well, you can scale with time. If you're out there and your money's working for you and now you have income coming in, well, guess what? You have what you're earning plus that, which means that your HLV just increased. Or this is when we expand the system to other insurable interests, our spouse, our kids, a business partner. This is why we expand our warehouses of wealth. And so even though you might come in and think that you could get this massive policy, the worst thing that could ever happen is you don't get approved for quite as much as we're applying for, which is not a rejection. It's just a roadmap to what's next for you. Does that make sense? That's the solution here is one, understand there's so much insurance you can carry. Two, dream about whatever it is. Feel how much you want to pay yourself. Follow the laws of wealth. Pay yourself first, at least 10%. Spend less than you make. Put your money someplace where it's uninterrupted and compounding, right? Like if Americans just did this thing I'm teaching you right in this moment, we would be a much different country and in a much different place financially. So again, this is not ever a rejection, but I want you to understand from a fundamental broker, licensed, certified infinite banking practitioner point of view, really the questions that your mutual company, your potential partner is looking at. The next question, this is the last one of the day, is how safe is this compared to the stock market, real estate or traditional retirement? Now, we've been in an up market for the last 12 plus years. Now, whoever you're listening to, the financial talking heads out there, you're seeing a lot of different things. You're seeing people say, hey, we're already in a recession. We already have high inflation. We already have the market's going up or crypto's down or whatever it is. But people are really asking here is, hey, Jason, I've been playing the common game and I love the concept, but is my money safe? Because, Jason, it hasn't worked out for what I've done so far. The things I've done so far haven't really felt safe. As you can see in that little example of the market's up and then it's down, then it's up. But over time, what does a financial advisor say? Well, if you just leave it in, you're in for the long haul. Good, great advice. We're in it for the long haul. But then the question is, how much is accessible? How much is liquid? What are the taxes going to be in the future? What happens when you're retiring and you're in a crash? How does it compare to the market in terms of rate of return and different things? Well, remember, whole life's not an investment. It's a separate asset class altogether. And when it's built properly with a mutual insurer, which are the most stable financial tools available. Do you guys remember how much of this stuff they own, the banks own with bank-owned life insurance? Over $225 billion is the answer. And why is it safer? Especially for the spouses who don't trust when we're like, hey, we found the greatest thing since sliced bread. Let's jump in. I'm having some of these conversations right now. But this is backed by legal reserve requirements, conservative investments that are growing slowly over time, 7, 8, 9% year over year for hundreds of years. And these large mutual insurers, like our partners, whether it's One America, Security Mutual Life, Lafayette Life, have paid dividends through every recession, every pandemic, every war, coming off of every standard there is, even with the implementation of our current Federal Reserve and the IRS tax code. Somehow, they're still profitable every year. Your cash never goes backwards. Let me repeat that. No matter what the market does, your cash goes from the bottom left to the top right, always, every day. For anyone who has a policy with one of these carriers already, start going in every week. I shared this yesterday and Ask Me Anything, and start looking at the cash value in your policy. Even if you have a max loan out, what you're going to see is every single week or every month, the cash value, depending on how they record it, is going to grow. And start monitoring that. Why? Because when you see it from the first year to the second year to the third year to the fourth year, whew, it starts getting excited. If you had a policy, as long as some folks have had them, 14 years, 15 years, 20 years, 30 years, now their policy is growing hundreds of dollars, if not thousands of dollars a week. True facts. Some of my peers are teaching this because they have 40-some policies within their family. And so when you're looking at volatility and you're looking for stability, you want the uninterrupted tax-free cash growth. And I was going to show you, what my policy looked like in year 20, in year 30, year 40. We'll do that another time. Like I said, each and every single one of these questions is enough for an entire show. I could talk about 2 hours on one of these subjects. But I know when I'm rolling towards the light, when my family, however many policies I end up with, I got this from one of my peers, but I'm going to be rolling down in my wheelchair, hopefully not ever in a wheelchair, but they'll be rolling me down. I'm going to go, hey, Mia Moore, don't forget to pay the premiums. Don't forget. Why? Because I understand that further down the road, that uninterrupted compound interest is giving me a 3, a 4, a 500%, like Connor's policies, 1,000% cash on cash return as that policy keeps going. Isn't that wild? And so we went through a bunch of this stuff. So let's kind of recap what we've learned and some questions for you how to use the system in real life for debt payoff, investments, major purchases. We talked about how insurability and your human life value shape how much you can fund. Remember, it's not about cost. If you're asking me, how much does this cost? You haven't yet escaped common thinking, which is okay. But just when you hear that coming out of your mouth, Jason, how much is this going to cost? I'm 55 years old. I'm 61 years old. I know life insurance gets expensive. Well, who told you that? Because that's not the truth. The truth is if you're healthy and you're insurable and you're doing well financially, changing one thing will change everything. Guarantee it. When you work the system, I've shown you how whole life policies compared to the stock market in terms of real safety and actually uninterrupted compound tax-free growth. But more than that, I hope you felt the power behind the real stories I shared. Because that family living here in Orlando, they didn't win the lottery. They just took time to understand a system. And they used it the right way to recapture that $48,000 that they had out with the bank controlling it. And I showed you how that turned into a $23,000 change of environment for them. And over time, that protected the family, created generational wealth, and created an opportunity fund to do the next step in their financial game plan. And the purpose was IBC isn't about financial hype. It's about real problems, everyday problems. It's about being prepared, not reactive. It's about long-term thinking, control, liquidity, legacy, and how do we have that tax advantaged? And now you understand how policies grow, how to leverage them, how to stay strategic, right? What's the most optimal thing my money can be doing? Now you know what it looks like, why you want to pay back your mutual partner. I didn't even mention the fact that when you pay back your partner and the company's profitable, who wins? You. Why? You get a dividend. So no matter what, this personal banking system that's going to compound, protect you, and fund your life, no matter what the market does next. So here's the move. Like, what is that opportunity in your life? What is the amount of money that you're paying yourself right now? What is the amount of money that is just sitting there in a money market or a savings account or a safe even, your go money. What could you do to unlock that if you use this system instead of doubting it? If that's the question, if that is your question, book a call. We get to the same place every week. There's never any pressure. I am not attached to your outcome. I cannot care more than you do. But hopefully I've shown you, not only my personal story, but what everyday folks are doing by changing one thing. This is a system that they don't want you to know. They do not profit from this. Remember, you are a vessel for their profit, period. Stop being a vessel for their profit. Be a vessel for your profit. Reach your dreams. Have more of what you want. Scan the QR code. Have the conversation. Many of you here today, I have helped change your life, and I've done nothing more than put you back in control. I haven't done anything. You've done all the work. And as always, I am so grateful that you showed up for yourself. You're doing the hard work. And don't forget, you better smash some stuff. You better ring the bell and subscribe to the channel. Our channel is blowing up. We're reaching tons of people. Come learn with us on a weekly, daily basis. We're always going to see you in the next video so you can keep learning. Because why? Your training will never stop. If you're testing with us, can you expand? If you're not yet testing, what is stopping you? Find that question, get that clarity. What habit do you need to change? And as always, super blessed, super grateful for each and every one of your energy. I love you guys, and I can't wait to see you next week.